Everyone's talking about the wild swings in the stock market today, and I'm sure you're also hearing the R word, recession. So just take a breath and hang on so I can shed some light on what's happening. First, I am not a financial analyst, but I can report about the news and the facts that have led to what's happening right now. And it's important for you to watch this whole video because the information I'm about to give you will help you form your own opinion about what's going on, so you have some context when you start to listen to the economists and the financial experts and start to figure out what you should do with your own money. Okay, here we go. I'm not going to talk about the specific stock market numbers because they fluctuate every minute, but it is fair to say generally the stock market has dropped a lot since Friday. But to understand this drop, you have to understand where we've been. This is the last 5 years of the Dow Jones Industrial Average, the stock market. You can see generally it is green, trending upwards, except for these two dips. One was during the pandemic in March of 2020 when the Dow dipped below 20,000, and the other was in September of 2022 when it dipped again below 29,000. But generally you can see all still in the green. And then in the month of July, so just a few weeks ago, we saw multiple days of over 40,000, which is a record high. Those were probably good days for your 401k. Then the last 5 days happened. You can see in the red, trending downwards, then this dramatic drop off right here today, August 5th. Like 2% decrease in the stock market, that looks scary, right? Well, if you plug the last 5 days back into this 5-year trend of the Dow Jones, you can see the drop off right there. That's where it is. So when you put it into context, yes, of course, you can see it's dropping down. But in context, it doesn't look as scary. And it's still well above where we were. Now, let's talk about what's causing the drop-off. The Labor Department's monthly jobs report, which was released on Friday, it found U.S. businesses added 114,000 new jobs to their payrolls in the month of July and found that the unemployment rate is now sitting at 4.3%. So you're probably thinking, those must be really terrible numbers for the stock market to react so dramatically. But that's the thing. These aren't horrible numbers. 114,000 new jobs in 1 month is nothing to sneeze at. But what's happening is 114,000 is significantly less than the extremely strong jobs numbers we've been seeing for the last year when we were looking at 200,000 or 300,000 new jobs added every month. The other important number in that Friday jobs report is the unemployment rate. Between 2022 and April of 2024, we had this whole stretch of time of unemployment well below 4%. In some cases, it was down to an historic low of 3.4%. So it's been low for a long time. And then after April, it started to creep back up. And as of Friday, for the month of July, unemployment was sitting at 4.3%. For the record, this ginormous peak you're looking at was peak pandemic, April of 2020, when the unemployment rate was almost 15%. So that not so hot jobs report from Friday, coupled with the fact that the Federal Reserve did not cut interest rates last week, and then some weakening in tech stocks we've been seeing, sent not just the US market, but also the global markets into, for lack of a better term, panic or fear that the US economy, the world's largest economy, is slowing down. But that slowdown is what the Federal Reserve has been wanting to see in order to get inflation down. So, what does this mean for you? Well, if you don't have your money in the stock market like most Americans, it really doesn't mean much for you. But if you have a 401k or other money in the market, you may want to reach out to your financial advisor to talk about what's best for you. This also means it's almost certain that the Federal Reserve will cut interest rates for all of us in September. The question is no longer if they're going to cut rates, but by how much they'll cut rates. We'll know the answer to that question when the Fed meets again in mid-September. And regardless of what you decide to do not panic, and please do not listen to unqualified people on the internet.